Hey friends, it has been a year since Nifty has not moved at all. I'm sure many of you would be losing out patience, especially if you are entered in the stock market to make quick money. However, for me, as a long-term fundamental investor, this consolidation in the market has created a great opportunity to accumulate fundamentally strong companies at discounted price. So in this video, I have covered 5 stocks that I have recently added in my portfolio. But this is not a stock tip. Please do your own research before investing your money. And friends, before I start today's video, I would like to share something with you. After receiving multiple requests to launch a podcast, I am finally looking to start one. Now, in addition to watching my content on YouTube, you'll be able to both watch and listen to me on my podcast on Spotify for free. I'm really excited to start this journey with Spotify, which is a great place to learn about financial investing through video and audio podcast. So if you don't have it, download now and get started on your journey. I'll be announcing the exact date of my podcast launch soon. So stay tuned as we take our personal finance journey to Spotify. First stock I've added is from banking sector. I've been very bullish on the growth prospect of banking stock for a long time now, and I've mentioned this multiple times in my videos. There are 2 major reasons for this bullishness. First is rising demand for credit across the country. There has been a sharp jump in loans post-COVID recovery across segments, including home loan, vehicle loan, consumer loan, etc. And this is resulting in high operating profits for bank. And this trend is expected to continue in the near future. Second major reason is falling NPA. During COVID, we saw a sharp spike in banking sector NPAs. However, post-COVID, there has been a sharp fall in NPA and the Indian bank's asset quality has improved a lot. This has further added to profits. Now, within banking space, I have added IDFC First Bank. This is one bank that I am closely tracking every quarter. And if you have been following my videos, you would know that IDFC First is part of my top portfolio and I'm very bullish on this bank's future. The last video I did on IDFC First was after its Q1 result. Under the leadership of Mr. Vaidyanathan, IDFC First has built a very strong banking franchise in India, and Mr. Vaidyanathan expects IDFC First credit growth to compound at 25% CAGR for a very long time. If that happens, IDFC First can become the next ICICI or HDFC Bank. Recently, bank has released the highlights of its Q2 result and its deposits have grown at 36% year on year and its gross funded assets stood at 1.45 lakh crore, which is up 24.8% year on year. Although the detailed Q2 results are pending, but I'm expecting another great quarter for the bank, and the best part is that this bank is currently available at very reasonable valuation. So IDFC First Bank is trading at levels of 53. If you look at last 1 year of performance, it was at levels of 50 and then it fell down to the lows of 30. Since then, in last 2-3 months, the share has jumped to again current levels of 53. At current levels, it is trading at a PE ratio of 26 and a price to book value of 1.56, which is looking very reasonable. Now, second stock I've added is from chemical sector. Again, I mentioned previously that chemical sector in India is a long-term structural growth story. Themes like China Plus One and Atmanirbhar Bharat have created huge opportunity in the Indian chemical sector. Although last year chemical companies jumped a lot and majority of them became expensive. However, then we saw a sharp jump in inflation that resulted in high input costs for raw material as well as gas prices, and that resulted in fall in margins and profitability of chemical companies. On top of this, the global sell-off resulted in fall in share price of chemical stocks as well. So one stock that I've added in the recent correction is Deepak Nitrite. Again, I've done an in-depth analysis of Deepak Nitrite in the past. Established in 1970s, Deepak Nitrite is a leading chemical company with presence across 3 segments: basic chemical, fine and specialty chemical, and performance products. Within basic chemical, Deepak Nitrite is a leading producer with 70% market share of sodium nitrite and sodium nitrate and nitrotoluene in the world. That has application in paint industry, petrochemical industry, and rubber industry. Within fine and specialty chemical, Deepak Nitrite is among top 3 global players of xylidine, cumidine, and oxime that finds application in agrochemical, colors and pigment, paper, personal care, and pharma industry. Within performance product, it has optical brightening agent and flavonic acid, which has application in textile, coating, paper, detergent, etc. It has a 100% subsidiary with name Deepak Phenolics, which manufacture phenol, acetone, and isopropyl alcohol. Deepak Nitrite is the largest producer of phenol and acetone in India. Phenols are used for making glues, household products, and as intermediates for industrial synthesis. Acetone is a solvent used in manufacturing of pharma products, plastics, cosmetics, and personal care products. Isopropyl alcohol is also a key component in the manufacturing of cleaning, disinfectants, inks, agrochemical formulation, resins, acrylic emulsions, pharmaceutical products, and sanitizers. Deepak Nitrite continue to expand the business by both backward and forward integration. It is planning a greenfield expansion worth 1500 crore over the next 2 years. Although chemical sector is still facing the risk of high input cost with high gas prices, that might impact the profitability in the short term. Currently, Deepak Nitrite is trading at levels of 2200, and if you look at last 1 year of movement, it touched a high of nearly 3000 and it fell down to as low as 2000. However, there is some recovery, and since it is trading at levels 2200, its PE ratio is 30, which is looking decent. Then third stock I've added is from IT sector. Although digital and IT companies have seen a sharp correction in recent times, I believe that it has only created an opportunity to accumulate quality stocks at lower levels. The reason being that India is a leader in IT sector with nearly 55% of world's market cap. We have the required talent base at much lower cost than developed countries. So Indian IT sector would continue to grow. On top of that, IT and technology stocks have negligible debt and they are highly profitable business. That's a perfect recipe for a multi-bagger stock. Yes, the recent global slowdown in US and Europe can hurt the earnings of IT companies for the next 1 to 2 quarters. But I have learned one thing in investment. Nobody can time the market. So if you think that you will invest when the IT stocks touches rock bottom level, then you will miss this opportunity. Because by the time you will realize that now everything is fine and I should invest in IT stocks, the chances are that IT stocks would have already jumped. So better approach is to cautiously invest in IT stocks in a systematic manner. And if you don't have the courage to invest in IT stocks, then at least don't panic and sell your IT stocks. IT sector is one of the strongest sector in India and the long-term story of IT sector is still very much intact. Although personally I already have a significant allocation in IT and tech stocks, so I'm not increasing a lot of exposure. But recently I have accumulated L&T Technology in my portfolio. I have also created an in-depth video on this stock recently. L&T Technology is not a traditional IT company. It is a leading global pure-play engineering research and development company with businesses in areas like electric vehicle, where it works with some of the top electric companies to build the next generation software on the wheels. Then it provides research and engineering services for healthcare sector, manufacturing sector, telecom sector, where it is helping organizations build the next generation devices using artificial intelligence, machine learning, IoT, etc. L&T Technology is currently trading at levels of 3,583 and in last 1 year if you see, it touched a high of 6,000. However, at current levels it is down nearly 40% from its peak and its PE ratio currently is 37, which is looking decent. Now fourth stock is from auto sector. Stock is Tata Motors. Tata Motors is an undisputed leader in the Indian four-wheeler EV segment. And it is just the beginning of electric vehicles in India. Over the next 5 to 10 years, the electric vehicle market in India is going to explode and Tata Motors has already got the first mover advantage with its Nexon EV range of cars. Company has already announced the launch of 10 new EV cars by 2026. Recently, Tata Motors has launched electric version of Tiago with starting version at 8.49 lakh rupee. This makes Tiago India's first hatchback electric vehicle product. And its biggest selling point is its attractive pricing. Tiago has the potential to become best-selling EV car in India. And let's not forget, Tata Motors is a part of India's one of the most trusted business house, Tata Group. That is precisely the reason, in spite of Tata Motors' negative earnings, DIs are buying it constantly. Tata Motors is currently trading at levels of 413. In last 1 year, the share touched a high of nearly 500-550. However, since then, the stock is still down 22% from its peak. Final stock is CDSL. CDSL is the largest depository in India with nearly 60% market cap. Depository is basically a company that manages the demat accounts. And there are only 2 depositories in India, CDSL and NSDL. Apart from managing your demat account, CDSL also facilitates settlements of trade executed on stock exchanges, facilitation of annual general meetings, update shareholder related detail, then online access to securities, execution of secure transaction and so on. Recently, CDSL has become the first depository to open 7 crore demat accounts. It has been an explosive growth in demat account opening. And it would continue to grow because ultimately every person would need a demat account. especially after the announcement of IRDAI that all the insurance will be converted into Demat by December 23. We are a country with 140 crore people and currently there are only 10 crore Demat accounts. So you can imagine the potential in Demat account growth. And it is not just the Demat account growth. As per reports, in India there is still majority of money invested in real estate, followed with gold, then bank deposits like FD, then insurance, and equity has a very small percentage of investment. Now that the awareness about investment in Indian markets are increasing, more and more people would increase investment in equity market. And not just in stocks, there is also an option of ETF which is still in very nascent stage in India. And ETF category is going to explode in the future. In short, the transaction in Demat account will increase significantly and that would directly benefit companies like CDSL. CDSL is currently trading at levels of 1272. In last 1 year, it touched a high of around 1700. However, at current levels, it is still down nearly 25% from its peak. And it is currently trading at P ratio of 43, which is looking decent. So in this video, we discuss 5 stocks that I have accumulated in this recent market correction. If I summarize, it includes IDFC First, Deepak Nitrite, L&T Technology, Tata Motors and CDSL. Friends, the idea behind adding these stocks in my portfolio is not to make a short-term quick profit. In fact, if there is more correction in the stock market, these stocks could even fall further. But I always look at the long-term bigger picture and I also know that nobody can time the stock market. Hence, I am utilizing this opportunity to accumulate quality stock at reasonable valuation and I am sure that in the next 5 to 10 years, this investment will generate great returns. Now tell me in the comments, which stocks are you buying in this falling market? And if you find this video useful, do like the video and subscribe this channel and press the bell icon to never miss an update. Thank you.